Welcome to Charts Today. My name's David Linton, and today's edition for Tuesday, the 17th of January, comes to you from London. And I'm running here this morning on my Bloomberg feed. I could just as easily be running, of course, on other feeds. This is DTN feeding into Updata. It really doesn't matter what you're using. That's the great thing about Updata. It runs on all these different systems. I'm going to stick with using Bloomberg this morning. We'll have a look at some DTN stuff in a minute. So first of all, we're looking at the currencies. Of course, sterling had a bad day yesterday, and awaiting the Prime Minister's speech today. There's quite a lot of sort of political aspects of Brexit. But the interesting thing is the charts have really been bearish for sterling for quite some time. So news tends to follow the price, really. And US markets were closed, of course, yesterday for Martin Luther King Day. So we'll look at markets, Asia, and then some commodities. But we start with the dollar index, and we see that with the dollar index we are just again down slightly. We're in this sort of bearish phase at the moment. We have been now for quite a few days, really about a week, and at the moment this chart is bearish. So we do have some downside targets, but we do have some support as well. So long term, the dollar still looks pretty bullish. An absence of medium term targets on this chart, which is quite interesting. But on the long term chart, we've got some pretty spectacular targets. One of the key things, of course, is that we might actually just be coming back to test this support level. So we broke out at the end of last year, and we may just be coming back to test that level from the other side. That's quite a common thing where you break the level, you come back and you test it from the other side before running again. If we then make a higher high, we will really start to see the dollar motoring. If we look at the euro, conversely, of course, charts are effectively the other way around, in that if the dollar's going up, the euro's going down. Mostly that's true, and so we see the euro at the moment is showing some short-term strength, but long and medium-term weakness. We do have these targets, and interestingly, on this 60-minute chart, we have actually now just started to reverse here. We need to go higher than this 106.75, 106.80 level to activate that 110 target. But we do still have these targets hanging over us. So we shouldn't be surprised, even though we've just changed trend here, we shouldn't be surprised to suddenly see that reverse. We'd want to see that target activated to be confident. And of course, keep an eye on the 1-minute charts. But the long-term charts, the medium-term charts for the euro are still pretty abysmal, and it does suggest something pretty bad is going to happen for the euro in the coming year. If we look at Japanese yen, we see the dollar is really falling away now, so that yen is strengthening against the dollar, and that's really showing up in the charts. We're just through on the weekly cloud. We're just coming back maybe to test the cloud. We're not through on the lagging line yet, so too early to call the end of the yen strength here. So we're just seeing the yen strengthening against the dollar, and we've got some downside targets here. So that's just a little bit of a clue that we might just see that dollar chart weakening against the yen. A lot of uncertainty around the US inauguration, new president coming in, and interestingly, the yen is typically a risk-on trade. So if we're seeing uncertainty in the market, then strong yen is what we'd often expect to see. Sterling, we've had that recovery this morning, so we're back above the 121 level, having really just been temporarily below 120 yesterday. The targets nonetheless have been put in. Where we closed yesterday was enough to lock that target out and actually activate that downside target. So in the medium term, we've got now a downside target of 99.50. We've got another target of 99. Two targets to the same place. That's what we call a cluster. So quite clear that we've got downside potential. And looking at the longer term chart, 116, 113, 102, and 1. So we do have this potential for much further falls in sterling. The charts, no upside targets to speak of, and in the medium term we've got 115, 119. So we are just seeing a pretty weak picture all round. If we look at sterling against the euro, we see that weakening as well. This 113 level at the moment, we break that, and then we've got 110. So if we're seeing parity against the dollar, we probably shouldn't be that surprised to see it against the euro. But because the euro has some pretty weak attributes against the dollar, it means that we're not seeing a lot of downside here with the targets on sterling. So both currencies look set to fall, basically. If we look at the sterling Swiss rate, again, at the moment, Swiss franc is strong. This is sterling weakness, just coming back below the cloud. Sterling weakness in the short term, Swiss franc strength. And against the Australian dollar, we're just hovering at that 160 area, 161. So just a proxy for sterling. Of course, US markets were closed, so we'll go straight to maybe looking at the futures. We look at the S&P future. We're still just holding a positive position here on the charts. We've got upside targets of 2% and 7% on this chart, and again long-term potential. And just looking at the Nasdaq future, again these futures down slightly this morning, but actually the position's still pretty bullish. The FTSE, of course, ended its amazing run yesterday with the first down day in 13 days. That's a record for FTSE, but the picture is still pretty bullish. Even though we've got a down day and we're seeing a bit of a fall this morning, we're well and truly above the cloud here. So at the moment, the FTSE is looking pretty rosy, and the FTSE 250 has actually just started to cross the crowd on the price, so not looking quite as good as the FTSE 100, which benefits more from a lower pound. And taking a look at the DAX, that's off slightly below the cloud as well, so we're just seeing a sell-off there in the short term. So it may well be that we just see a little bit of a pullback in markets. The Japanese market pulling back quite significantly, stronger yen. As we've seen in the UK, weaker sterling, stronger market because of earnings. The same in Japan. We've seen weaker yen with stronger dollar, and that has actually fueled a rise in the Nikkei. But now we're just seeing, as the yen strengthens again, that market coming off quite quickly, and we've got downside targets of 2.9%. China just up very slightly, but still bearish below the cloud, and the same on the Hang Seng. We're not bearish in the short term here, but we are definitely in the medium and long term, and quite a lot of downside targets. So still a bit worrying. If we look at the Indian market, we see here that we're very much in the driving range here. We're strong on the short term, strong on the long term, and just starting to show that transition on the medium term as well. The Aussie market down nearly 1% overnight, and just starting to wander through on the cloud. So this is a theme of markets at the moment. We're just starting to see some short-term weakness creeping in, uncertainty surrounding the election. If we take a look at Brent crude, bullish on all three charts. So we're bullish here above the cloud, bullish, bullish, bullish. Long term, medium term, and short term, all bullish. Upside targets 58, high 50s, looking pretty likely pretty soon. And then we've got these targets into the 70s, 72 and 76. So we expect crude to have a strong quarter ahead, and that's showing up in the WTI chart as well. Taking a look at nat gas, we said yesterday it was looking pretty bullish. It's above the cloud and rising, and again we've got these upside targets here, 374, 357, 351. So we are seeing upside potential here, multiple targets to the upside. If we take a look at gold, we've been pretty bullish on gold in the last few days. We've seeing this recovery kicking in. Support on the cloud and the lagging line is what really is going on here on the weekly. Gold up again this morning, up nearly 1%. That's the risk on trade again, so that's quite key. And interestingly, this as we see this rise here, this thrust is going to give us a new target. This is not locked out yet, so when it does lock out, at the moment it's a target to 1259. That's 3.8% upside, but the column actually isn't locked, so we may actually produce an even bigger target. And when we see a pullback and then run higher, that activates that target. At the moment we're gunning for these 1225, 1223 targets. They've been sitting there. Notice how the short-term chart is pretty bullish, and we're seeing that showing through on the clouds as well. We might hit some resistance here on the medium-term chart, but gold is looking pretty good at the moment. And if we look at The silver chart, much the same picture. Taking a look at US interest rates, last of all, we are just seeing that fall away here. So we're just coming back below here. 230, 2.3 is the yield. We're seeing a downside target to 1.92. I think that's probably unlikely given the state of these clouds. So for the moment, US interest rates just coming off a little bit on the 10-year Treasury yield. That's it for today. Until tomorrow, happy charting. See you then.